Well, good morning, everyone. I see people are entering, so I'm going to wait just a moment until we had quite a few people register and giving everyone a moment to sign in
Good
before
morning, Sherry. Can you hear me?
I can. Hey, Ron.
Okay. I don't know. Are we both being seen by the public now?
I believe we are, along
Okay.
with the presentation.
Okay, perfect.
So
Okay.
we've got almost 150 people in. I just want to give it just another moment. And I appreciate everybody who's on time and ready to get started. Been hearing a lot of excitement to hear you this morning, Ron.
Well, I'm excited to hear me too. There's a lot to talk about here, so we're going to have to talk fast because there's a lot to cover. But we're going to try to get everybody out of here, hopefully in an hour. So don't leave us if you're already with us. We'll try to rush through. We're going to try to condense it a lot, and of course we'll have an online version of a lot of what we're talking about today, a full online version here in about another week. So. But this is a preview of what we saw last year and what we expect to see for this coming year.
Absolutely. All right. Uh, so somebody said there's a lot of echo. I don't know if everybody else is hearing that. I can tell you Ron and I are not in the same space, so hopefully that's not occurring. So I'm going to go ahead and kick us off, Ron, if you don't mind.
Okay.
So good morning, everyone. I'm Sherry Porter, Senior Vice President and General Sales Manager with Berkshire Hathaway HomeServices EWM Realty, and it's great to be together again. And I'd like to welcome all of our attendees today, including those who are joining us as our guests. I know we have the Key Biscayne Chamber and some of its members, along with a lot of other real estate associates and professionals from South Florida and outside of our area even. Welcome. I'll be hosting our time together as we kick off the new year with our 2022 market update with Ron Shuffield, our president. Ron is our go-to source for the latest in real estate, and his comments on the South Florida real estate market have been featured in the Wall Street Journal, New York Times, Forbes, CNBC, the Miami Herald, The Real Deal, and a lot of other news sources. We'll be unpacking a lot of information, so you may want to have a notepad and pen handy. We'll be recording this session and sending it back out to everyone. You know, some of the things Ron will be touching on are how the market fared in 2021. Will inventories start to increase? We will talk a little bit about the surge in the condo market, how interest rates will impact the overall market, and what we can expect to see in 2022. Should you have any questions, I'll be monitoring the chat, so feel free to type in any questions you have. And as Ron mentioned, typically these presentations last about 75 minutes. We do Q&A at the end, but I think we're ready to go, Ron. So I'm going to go ahead and let you get started. Here's Ron.
Okay. Thank you, Sherry. Yeah, before I get started, let me tell you a little bit about what's happening at HomeServices. Last quarter of last year, we added 4 new sister companies to our ranks. So we obviously have been the largest real estate company in America for the last 3 years, but this year we'll even be larger. You know, to kind of put that in perspective, these 4 companies that just joined us have 1,400 associates, about $8 billion in collective sales, and they're scattered all across the country. A new brokerage for us, but experienced and a long-established company in St. Louis, one in the Florida Panhandle, so another Florida broker to join us, South Dakota, and Palm Springs. So that's a real diverse group from coast to coast. So we're very excited to have those folks with us. I got to meet them yesterday on a Zoom meeting that we had with my counterparts across the country. But what this brings our total sales to last year was $203 billion across the country. We had 395,000 home and condo sales across the country, which ranks us number 1, and also puts us at about 1,000 sales every day. So 24/7, somebody's selling homes across America, 1,000 a day, and 295,000 mortgage and title and insurance transactions. So we are serving the nation well through with the help of 46,000 associates that are part of our sister-owned companies. And these are companies that are all owned 100% by Berkshire Hathaway HomeServices. And then in addition to that, we have all of our franchise friends at the Berkshire Hathaway HomeServices network, scattered not just across the country, but now across the world. So we'll be talking a little bit more about that as I get into this today, but mostly we're going to be talking about the South Florida market. So, when you think about where we've been for these last few years, you think, well, how in the world has South Florida become the place to go? When you look at this beautiful spot here down the beach, and of course, we have these shots now down a lot of our beaches. This is Miami Beach, but, whether it's Fort Lauderdale or Palm Beach, we have just one beautiful setting after another. If you look in the distance of this picture, you see Privé sitting out there in the middle of the bay, those new condominiums that are sitting on an 8-acre island. We've been a part of a lot of the sales that have happened there. Our Aventura office, of course, is just around the corner from that, across that bridge there that you see. And of course, along the beach there, we've sold in pretty much all of those buildings. So, but when you really look at what's driving this new status that we have as a South Florida community, this is not something that's just happened during the pandemic. The pandemic has certainly accelerated it. But when you look back over the last couple of decades, and even 4 or 5 decades, when Miami was the first community that really reached out to South America to say, come live with us. I moved here in 1975, and so little did I know that I was just coming at a point, kind of an inflection point for South Florida, that the world was beginning to take notice of what was happening. I think of Venezuela as being one of the first countries that really just poured into South Florida, buying second homes mostly. And of course, many of our Venezuelan friends are now living here full time and have moved from a small condo in the beginning to large homes today. And so we have become such an international community that we are now recognized globally as a city that must be included with every international connection. And when you now add to that Broward County and Palm Beach County, the world really looks at us as one community. As you drive down 995, you know that we're one community. But even looking at this beach shot, you realize that we have created something that's very, very special for the whole world. Now, when you kind of look back, though, even more recently to 10 years ago, when we started, 20 years ago, when we started courting companies, large companies, to move here, we were built on the foundation of hospitality. And of course, the hospitality industry continues to do extremely well. But now we're bringing in a lot of financial companies, tech companies, and this is all the way from Miami to Boca Raton to Palm Beach and all the areas in between. And so when you think now of who we are, we're no longer just hospitality. I mean, obviously our cruise industry is a huge industry and the largest in the world, based right here in South Florida. So I think that when you start seeing Microsoft signing a lease here recently, just a couple of months ago, signing a lease on Brickell Avenue for 50,000 square feet of office space for Microsoft executives to come. These are not lower paying jobs. These are much higher paying jobs. Our company was fortunate to be one of the founding members of the Miami-Dade Beacon Council. And of course, the Beacon Council's role is to bring new jobs to our community. And when you hear about some of these jobs that are coming in today, these are not entry-level jobs. These are significant positions with average salaries, in the certainly triple digits. I mean, 100,000 plus, but now we're even going higher than that, 200,000 plus, 500,000 plus for some of these companies that are coming in here for average salaries. So I think that this is what we're now seeing, and especially in the sale of our high-end luxury housing. And I think that will continue. So this is not something that is just a fluke that's happened, and that once the pandemic goes away, this interest in South Florida is going to go away. People are firmly planting themselves here. If we had more time every day, we probably should all start a private school, because our private schools are bursting now at the seams to try to accommodate the new young families that are coming here. So, all these things are being witnessed now by the rest of not only our country, but the whole world. So I do believe that, Miami is the brand, but South Florida is the product. And I think that most people would agree with that, regardless of where they live along our shores here. But I do think that the three counties have been working very well together, especially from the economic development standpoint. So that continues to attract more to our community. I'm going to talk in a second here about some articles that have been written about why people are coming here, specifically during the pandemic and wanting to leave maybe where they are. So with that, Sherry, I don't know if you're having any questions come up on anything I've said already, but if someone has a question, this is going to be very interactive. Sherry is going to help us to kind of track this as we go. But I know that I can talk a lot here, but I want to kind of move now to kind of some of our numbers. Okay, this graph you have seen before. It takes a while to kind of absorb this graph. There's a lot on this graph, but it's to me, the number one graph in our industry because this overlays the median price with our months of supply. You've heard us talk for years now about the optimum number of months of supply is 6 to 9 months of supply. So if we have 6 months remaining to 9 months remaining, everybody's happy. We have enough buyers, enough sellers. We're selling in an increasing value, but in single-digit increases, not double-digit increases that we're experiencing now. And if that's continuing to happen, then everybody's happy. So as you see these vertical bars, if you look back to the 2007, 2008 period and early 2009, that shaded area in the pink there was the recession. So we know that for a couple of years there, we weren't sure where we were headed. We just knew that inventory was piling up and sales were slumping. And of course, the median price overlaying those vertical bars shows what happens when your inventory grows to the level we were experiencing back during that period. Now, again, I'm going to leave this graph up here as I talk, and I want you to really kind of focus on it because this is the basis of our business. If you look at the highest bar in that shaded area on the left, you see that it's up to about 42 months of supply. These are for single family homes. So we had 3.5 years of supply of single family homes in our market during that period. Well, as I've said, 6 to 9 months is the optimum range that we would like to have. So when you get to 42 months from 6 to 9 months, you know that something has to give. And what always has to give is price. So prior to the recession, our median price was $373,000. This was March of 2007. $373,000 was the median price of a single family home in Miami-Dade County. And I'm going to talk about these also for Broward and Palm Beach. So if you're waiting for that, those are coming. So $373,000. I remember the summer and fall of 2005, South Florida had 3 hurricanes, Rita, Katrina, and Wilma. Those 3 hurricanes came in a 65-day period, which really accelerated the recession for us. We didn't have electricity for 17 of those 65 days in 2005. And so we kind of thought, well, we'll get through this. We've gotten through hurricanes before. But then when we moved into 2006, it just continued to linger. The inventory continued to increase. Sales started to drop. And then prices really started to drop. And as you can see in that green line, during that 2-year period, we fell from 373,000 down to somewhere in that 175, 180 range as a median price. Now, it's so easy to look back at these graphs, a lot easier looking back at these graphs than looking forward. But where in the world were all of us when we could buy a median price home in Dade County for $165,000? And that's what it had fallen to at the beginning of 2011. So we went through that period, value fell literally in half, more than half. And then we started a long climb back up. But look how steady this climb has been. The inventory corrects pretty quickly when the price is there. And again, when we're appealing to a global market. So when we say we're having a 50% off sale, the whole world came. And so that's what happened during that period. So we sold not only to internationals, but certainly to domestic buyers as well. But the internationals really came in that 2011 period and scooped up a lot of our inventory. And as they continued scooping up the inventory, as you see down along the bottom of those vertical bars, they all started decreasing. So, we finally got into under 5 months of supply in 2012, 2013, 2014. And then that continued all the way through about 2000, almost into 15, early 16. You started to see we got up above 5 months, and then we started in 2018, 19, kind of spiking up a little bit more there. And then we got back to where we were in 2007. So as you see there, the median price at the peak of the recession was 373,000. And then in March of 2020, we hit that number again. So it took 13 years to get back to that. And then the pandemic came about the same time that was happening. And look how it has spiked. Now we're up to this number that's shown on here is a number that is
Ron, I think you've muted yourself when you were clicking.
okay, there we go. Got it. Okay.
We have sound. Thank you.
I'm sorry. Well,
No,
if you missed some of that, then where I muted. So as you see in that top right corner, $540,000 was our median price at the end of December. Now you'll hear me say in a minute that the average median for October, November, December was 510,000. So we are clearly, into the low $500,000 now as a median price of a single family home in Dade County. And now that you've gotten a good picture of how this graph looks, I'm not going to spend as much time on the next ones, but this next one is for condominium. So this is the condominium graph for Dade County. And as you see there, like we saw before, during the recession back in 2008, we hit a median price of $265,000. It fell to $112,000. And then it started to steady climb up again. And inventories there were a little bit higher than you saw in single family. We got back up into the mid, 18 months range. And then in September 20, we hit that same price where we had been before the recession. Again, 13 years later for condos to get back to that median price of $265,000. And now December, we're at $358,000. So that is, that's remarkable how fast the pandemic has pushed us. And of course, the reason the pandemic pushed us in the very beginning was because of fear of being in other places that were in a lockdown state. They could come to Florida and be in the open air. Our restaurants all moved outside. We were very, very welcoming to the entire world during the beginning of the pandemic, when people were so anxious about being where they were, especially in large cities, tall buildings, everything's closed in. And so this is what's created all this demand for us. But the demand was already building before we got there. Okay, now this is Broward County. This is Broward County single family. And you see not quite as sharp an increase, but not the fall was not as deep either. So I think that this graph is still showing the same thing since the pandemic, though, where the median price got up to $505,000 at the end of December. And you'll see the average of these last 3 months in another report here in a second. So this is Broward County, very similar graph. And again, you're going to have access to all these graphs, which you'll be able to send out to your sphere of influence. Okay, then the condominiums for Broward County. Again, very similar steep graph from 2011 up to June, or steady graph up to June of 2020, and then a steep graph going into December of 21. And then this is Palm Beach County, very similar. Actually, I think we all expect that, a higher median price than Dade County at $560,000. But again, that similar looking graph making its way back up. But they did reach their peak price before Dade County and Broward County did. They reached it back in 2016. So from 2007 to 2016, they got back to a balance in 9 years, while it took our other two counties 13 years. And then if you look at condominiums for Palm Beach County, similar looking there, but not as deep a fall, but even though their inventories, as you see back during the recession, was very, very high. And then the inflation effect. So we haven't had to talk about inflation for a long time, but I think that what we're going to have to be discussing with a lot of our buyers and sellers over these months ahead is, where is inflation going? We've been reading these headlines for the last 2 or 3 months. Some of the conversation that's going on in Washington about how tight should the Fed get on easing our money, or how tight or how much more should they tighten our money. And I think that we're going to start to see that here in March. It sounds like we're going to stop buying bonds, and so we're going to see interest rates probably increasing a little bit, which we've already begun to see. But the inflation, of course, has everyone's attention. As you look back at this graph, this goes all the way back to 1960-ish, I guess, and 1970. You see that in 1980, we kind of peaked out there in inflation. So our CPI at that point was somewhere between 12 and 15%. So just kind of pick a number, say 13, 14% there is where we got in 1980, excuse me. And my wife and I bought our first home right at that period. And so much of life is just being in the right place at the right time. We bought a house. We thought, well, okay, this is a stretch. We recently married, and our house went up in value, probably doubled in the first 3 years we owned it in that 1980 period, because inflation had a lot to do with that. Inflation is a friend to real estate until it's not. But I think that we will continue to see it being a friend to us right now, because inflation, I think, is behind a lot of these increases that we've had in value. At the end of the day, supply and demand is really what this business is built on. I mean, that's what economics is based on. I remember my first economics course in college when our professor said, if the supply decreases and the demand increases, you're going to have price increase. And it's pretty simple. I mean, it doesn't take a lot to figure that out, that when our supply gets down to these historically low levels of less than 2 months in many cases, when we need to have 6 to 9 months, we're going to have significant appreciation. And of course, this inflation here that we're looking at, this inflation graph that we're looking at, also will have some impact on that as well. So we need to keep our eye on this inflation. I'm confident that our Fed will get this under control, but it probably is going to come at the expense of some of our interest rates. And it's already beginning to show up. This graph here, again, you take a little time to look at this, but as you see in October of 81, that's when we were having that inflation before that I just showed you the graph on. Our interest rate was 18.63% during that period. Pretty amazing that we actually lived through that kind of a period. And that happened pretty fast. I mean, in 78, 79, the rate, if we had that posted here, would be somewhere in the 7 or 8% range. And then 3 or 4 years later, we were dealing with these 18% kind of ranges. And then by 95, we were at 9.2%. December of 09, 4.7%. January of last year, 2.65. January of this year, 3.45. All of these numbers are coming. We actually pulled this down from the Federal Reserve Bank of St. Louis, because they have a really cool site. If you ever want to go to a site to talk about these numbers, and they present it in a very easy to follow format. It's the Federal Reserve Bank of St. Louis. And so this basically kind of tells us, where we've been and kind of what to expect. Now, what does it mean when the rates go up from 2.65% to 3.45%? Well, this graph you've seen before too, the effective interest rates on our buying power. This is a very simple graph, but it's a very simple calculation. That if our borrower that's buying a home from us today is borrowing $500,000 at 3%, which really, you can't really do that anymore. But on a 30-year fixed rate, we're probably, as we just saw, like in the 3.5% kind of range, I guess. But let's assume that we're at a 3% rate today, borrowing $500,000. The monthly payment on that is $2,108. Many people borrow the maximum that they can afford. And so if that's all you can afford and the rate goes up, you can still only afford $2,108 a month, then principal and interest payment, then the only solution is to borrow less money. So as you see going down that diagonal, the 2,108 squares going down to the right, with every one of those increases of 1/8%, you get to borrow less money, or you won't be able to borrow as much as you could have at a 3% rate. So that 1% difference from 3% to 4%, as you see in the bottom left corner, that erodes your borrowing power by 11.7%. That's $58,452 that you will never be able to borrow if you keep that loan for 30 years. That's the most that you will be able to borrow. If you want to borrow 500,000, then as you see at the top row, your monthly payment would go up to $2,387. So, Sherry, I don't know if you have any questions about anything here, but we will keep going.
Actually, Patrick Bilodeau had asked about what the projected inventory in the coming months, considering how low everything is right now. I don't know.
Okay.
If you have any thoughts.
Well, we're going to talk about that in just a second. I'm going to leave this interest rate chart. We have these for you to use. We have them printed. They're on a card stock. If you want to pass these out to your buyers, this is what's motivating a lot of our sales today, that people have been feeling this pressure for some time. So I think that, this is something that we will be able to continue monitoring. We will need to continue monitoring as our buyers are in the marketplace right now looking for a mortgage, looking for a home first and then a mortgage to go with it. Okay, so this is kind of what we've been reading a lot about here lately, and this is why we have seen so many people coming our way. When you look at what this graph or what this picture represents, it talks about, and the article that goes along with this, it just talks about how many people are leaving other places. Like, and this is a Wall Street Journal article. I'm just looking at it here. You can't see it, but the Illinois population declined in 2020 by 141,000 people. And California's declined by 300,000 people, and New York declined by 365,000 people. And in contrast, Florida gained 264,000 people. So as you'll see in a minute, we'll show you here how we compare with others. But this has been a real accelerator to what was already happening here. When I look back, there was a lady named Alice Robertson. She was the head of the DDA, and unfortunately, Alice passed away last year with cancer. But she was amazing. She worked for the county for 40 years. Her last position was the director of the Downtown Development Authority, and she just understood marketing. And so during the recession, when everybody said that Brickell Avenue was just falling apart and values would never come back, she said, we need to have a study to show really what's happening here. She commissioned a marketing study, and they came back and said, no, this is a very solid market. Here's what's happening. Brickell City Center, was not there yet, but they were talking about it. And so what that one study did for the Brickell market in the midst of the aftermath of the recession, it just pumped it right back up. And so, today, of course, what we see, all the new growth there, the Microsofts that are coming, the Brickell City Center, over $1 billion development there. That's, such an asset to the entire community. That has now, all that hard work of going out and finding companies to move. Again, Alice Robertson put together a team to go to New York and meet with hedge fund companies long before the pandemic. I mean, this is 10 years ago. Certainly over the last 5 or 6 years, before the pandemic, we had large financial groups moving here, and a lot of that was driven in these last 4 or 5 years because of taxes. And we'll talk about that a little bit more too. Okay, so here are the tax rates. As you see in the across the country, there are now 8 states. There were always 7 states with no state income tax, but now Florida, Tennessee, Texas, Alaska, Nevada, Wyoming, South Dakota, and Washington all are now 8 states that have no state income tax. And you'll see in a second here, it's understandable why a lot of people are moving to these states and moving away from states like New York. New York shows on this is 8.82%, but when you add on the Manhattan tax, it brings it up to over 13%. California, the whole state, is at 13%. Even places like Minnesota are at 9.85%. Again, these are for the higher end earners in those communities, but even, the mid-price, the mid-income level are paying higher taxes across the country. So certainly the tax effect has been a huge draw for states like Florida, in particular Florida. So then this shows where people are moving. Now, last year in 2020, the census gives us these reports from July of one year to July of the next year. So the last report we have is in July of 21. So from July of 20 to July of 21, we saw these changes. And 20 states in the United States lost population this past year. So all these states that are colored in blue are the ones that have lost population. As you can see from left to right, California is losing at the rate of 718 residents a day. These are net differences. So if you add the births and the people who move in and subtract the deaths and the people who move out, then they have 718 fewer people at the end of every day. In comparison to Florida, where we have now 579 more people every day. Texas, obviously, the third largest state in the country, or second largest state in the country, 850 people a day are moving there. But then when you look at the Northeast, look at how many of those states are losing population. Pretty much all the states in the Northeast are losing population. 870 fewer people in New York, at the end of today. I mean, this is like every day of the week. Pennsylvania, 70 people a day, and then Illinois, 312 people a day. So this has kind of been a wake-up call for a lot of these states that have been charging high taxes and not delivering, the level of service that their residents can receive somewhere else. One interesting thing to note in Washington State, up in the top right corner there, if you look back a year ago, they were growing at over 200 people a day. You can see in that graph down at the bottom, that was last year's graph. And last year they had a green box or green shading on their state. But Washington State, in the far northwest corner of our country, has put a new tax in place, 7% tax for on your long-term capital gain. So of course, long-term capital gain drives a lot of investment in this country, because you can save tax on holding a property for more than 12 months and then paying your taxes on that profit after 12 months. But now in Washington State, they have decided that they will tax that in addition to the federal government with another 7%. And of course, that's now causing people there to want to move out. So you're not having as many people move in. So I would, in my mind, it would probably be pretty easy to project that maybe Washington won't have a positive number of people moving in next year. It might be a negative number. So this is why Florida has been, has been so, I guess, attractive to people from all over the country to move to a community with great climate, and now, of course, a full community of services from schools to major universities. I noticed this weekend that Florida International University is now 50 years old. So from 50 years ago, just to be a brand new college university, not even a four-year college at that point, they now have 50,000 students. So remarkable, what FIU has done, and so many of our local leaders are now FIU graduates, and have been instrumental in building Miami, and they have shown how valuable those institutions of higher learning are to our community. Okay, so this is where the people have come from. Now, Sherry, your question.
I was going to say, before you move on, Chris Bassick was asking, is there data on the demographics of the people moving here and maybe their income levels?
Yes. We don't. I'm not talking about that here today. That's what our Beacon Council, other groups in Dade County and Broward County and Palm Beach County do track all of that. So, and all of those numbers are much higher than they were pre-pandemic. And again, that started with the hedge funds and the financial industry. I mean, a lot of wealth, a lot of high incomes in those industries. And so those are really plum property or plum companies to get to move to your community. And of course, one thing about that is that a lot of these people coming from these states like New York, where things have historically been much more expensive, two and a half times our prices. And many of those buyers have come here with a mindset that, my goodness, these are such values. we should buy two of these homes, or, or certainly, not quibble about, what our prices might have been at the time they came. Now, prices obviously have increased substantially, and we'll see that here in a second. But and I think, though, that we still are undervalued, even with the prices that we have today. When you think about prices, well, let's just get into the prices here in a second. Sherry, did you have something else that?
Well, and somebody piggybacked on that. Do we have data of people to buy me Dade County? And then I guess somebody else is commenting, should locals be worried about living in, I guess, South Florida because of these?
Yes,
Right.
and that's a concern, and we will have some people that say, you know what, I need to go to center part of the state or somewhere where it's not quite so expensive. But then people start balancing their job income and those kind of communities versus our community. I mean, most higher priced communities have a higher priced job market. So I think that's what we're watching happen right before our eyes here. That the people that are coming in are making a lot more income than what we have historically seen moving into our community. And I think that's going to continue. Now that spigot has been opened widely, it's kind of like, my friend moved, and so maybe I should look at moving. And then you say, okay, well, then I'll move too. And, that kind of conversation goes on, between, fresh out of college people up to billionaires. And, it is interesting how that demographic works, that people will follow each other, and I think that that's what we have seen in huge numbers these last 2 years. This gives a good snapshot of the single family market for the 3 counties. So we've tried to make this as very easy to follow as you can. I should mention Lee Casey while we get to this. I mean, Lee is such a great artist at all this stuff and putting all this together to make it very simple for us to be able to grasp. And of course, we all know the numbers, and there are a lot of numbers today, but without putting it down on something in a nice, easy to read format like this, it's kind of hard to compare and comprehend exactly what impact that has on our community. So back to single family, this is for the 3 counties. As you see, our inventory from December 31st in 2020 to 21, inventory decreased 34%. Our sales increased 16%. Now you're saying, well, gee, I know sales are increasing more than that. You're going to see in a minute that the big story in 21 was the condo sales. Condos came alive last year. These numbers, if we look at these numbers, if we go back and look at these numbers from last year, our increase in sales from 19 to 20 were far greater than we're seeing from 20 to 21, because we're working off of a much larger, foundation from last year. So sales of single family homes in Dade County increased 16%. And then if you look down the right below that, the median price increased 15%. So a median price for the fourth quarter of last year versus the fourth quarter of 20 increased from 443,000 to 510,000. And you saw in that earlier graph that we looked at that's still going up pretty significantly. In December, that median price was $540,000. Now, what does that do to supply? That's what we've talked about a lot already this morning. Supply is the driver in our business. You don't need to know what city we're talking about, anything other than that supply number to tell whether or not the prices in that community are going up or down. Now, 2.2 months of supply for all single family inventory is historically low. Last year at this time it was 2.7 months. So we've been dealing with this now for about 3 or 4 years now. And really, since Tax Change Act of 17, that had a super positive impact on our marketplace. And we started drawing people as far back as 4 or 5 years ago now. But now we've really accelerated that pace. So again, I'm going to go through these other ones a little bit faster, but as you look at those 4 boxes under Miami-Dade County, it's the same 4 boxes under Broward, same 4 boxes under Palm Beach, but you see that our inventory is down in all those cases, 34% in Dade, 44% in Broward, 59% in Palm Beach. Sales are up 16%, 15%, 10%. And the supply is down 19%, down to 2.2 months in Dade, 1.3 months in Broward, and 1.2 months in Palm Beach. So when you see where, we know that we know that people from the Northeast and all these, internationals, they're all are coming to one of these three markets. And of course, the Palm Beach market has always been on the more expensive side, but we are catching up with that very quickly. In 2020, 2020, we sold the most expensive home ever sold in single family home sold in Miami Beach. That was for just shy of $50 million on Star Island. And then just 1 year later, our sister Berkshire company here sold on the same Star Island, right across the street, a home for $75 million. So we are going to see these level of prices now coming up to the Palm Beach level. And prior to this, Palm Beach was the only community that had these mega sales of single family homes. But now that we've had a few in Dade County and more yet to come, I think we're going to continue to see more of that high-end market coming here. So now I'm going to move now to condos. So kind of get take a mental snapshot of this 16% increase in sales, 15% increase in sales, 10% increase in sales. Now this is condominiums. Now this is the same county. This is just the condos in our counties. Dade County had a 79% increase in condo sales last year. Broward County a 42% increase, and Palm Beach a 35% increase. And the inventories for all of those are decreasing. Dade County inventory for condos decreased 53%, 62%, 72%. And then of course the supply, for condos, if you look back just a few years ago, it was not uncommon to have 2 and 3 years of supply for condos. And now in Dade County, 3.3 months of supply, Broward County, 1.7 months of supply, and then Palm Beach County, 1 month of supply, 1.1 months of supply. So, I'm going to flash back here to the single family, 16% increase, 15% increase, 10% increase. Condos, the same counties, 79% increase, 42% increase, 35% increase. We are seeing median prices now increasing for condos pretty much in every price level. So again, this is the overall market for the three counties for single family and condo. Now, just looking at specifically at the under $1 million market for the three counties. So this again are single family homes under $1 million. We've seen that inventory decrease 30%. Sales have only increased 5% because we're running out of enough of that inventory, for people, to choose from. Right now, we only have 1,594 homes on the market in Dade County for under $1 million. And we sold 13,000 last year. So those stay on the market, as you know, not even hours in many cases. Same things happening in Broward, same things happening in Palm Beach County. So again, these are the under $1 million market. And when you look at the under $1 million condo market, even tougher. We're just depleting our inventory. Sales are up 70%. These condos, it's refreshing that they're finally getting some increase. I mean, in all those developments that we were involved in Dadeland, downtown Dadeland, Toscano, those two buildings they saw very little, if any, appreciation in the 15 years they've been there. But now we're starting to see double-digit appreciation in those units and very limited inventory. So that's very positive for people who own those. Many of those are investors that own those. So that's very positive because the rents are also increasing. But I know with every word I'm saying, we're all saying, well, but what about the what about the person who's on a fixed budget and has been here their whole life? And we'll talk a little bit more about that in a second. Okay, the over $1 million market for single family homes up 107%. So people are still, tirelessly looking for this type of a product, over $1 million. And of course, we're not going to talk about individual communities today, but some of our individual communities are way up into, Key Biscayne, way over $3 million now as an average price. Incidentally, on Key Biscayne, congratulations to our Key Biscayne associates. You are #1 in the market and both number of units sold and total dollar volume. First time you've been #1 in both of those categories. I know we have, many of our offices have enjoyed being #1 in a lot of their markets for a lot of years, but for you guys, this is the first where you've had both of those. So congratulations. I know you've worked hard for that. Okay, the So these are single family homes, total sales up in Dade County 107%, 97% in Broward, 60% in Palm Beach. And then again, you look at condominiums, look at Dade County condos, over $1 million. Sales are up 226%, Broward up 152%. So in all these categories, well over 100%, Dade County over 200%. Inventory continues to fall. So in condominiums in Dade County now over $1 million. A year ago, we had 2,700 on the market. Today we have 1,700. So we have 1,000 fewer units on the market than we had a year ago in Dade County. Broward County, only 267 on the market. Sales are up 152%. So in Broward County last year, there were 695 sales of condos priced over $1 million, and we only have 267 on the market this morning. And in Palm Beach, very similar, not quite as unbalanced as Dade and Broward, but 1,700 on the market, sold 1,200 last year, 108% increase. And then, of course, you see the months of supply. Look at Dade County. The months of supply a year ago for $1 million condo in Dade County was 27 months. It was over 2 years of supply. This morning, we have 8.7 months of supply. So very, very positive graphs or positive chart here to look at. Okay, and then if you look at all this by market segment, Sherry, is there anything else there that I didn't answer from your last questions?
Nope, everything's good.
Okay. All right. This is the under $500,000 market for the entire counties. So, boy, somebody's on fire. The 34% reduction in inventory in the under $500,000 market. Just a few years ago, the under $500,000 represented 50% of our market. And now today, that's somewhere in the 20% range. Single family homes in Dade County now over $1 million represent 20% of the market. So 20% of all the sales in Dade County are now over $1 million. That's one of every 5 sales. And Broward and Palm Beach Broward's about one of every 11, I think, and Palm Beach is similar to Dade. So I think that we will continue to see this under $500,000 market just continue to slowly shrink away, because this is a market that you really can't build for anymore today. If you buy a piece of land and build a house on it with construction costs going up, land costs going up, much of what we're still selling today is selling for less than replacement costs. In fact, I would say pretty much everything is selling for still less than replacement costs. But if you take into consideration the underlying value of the land that these new homes are being built on, and then the cost of construction. So this is under $500,000 single family. This is under $500,000 condominium. Again, you see those percentages of sales, all certainly double digits, 56%, 37%, 27% increases in sales. And then the next category is, I'm going the wrong direction here. The next category is the 500,000 to $1 million, 56, 61, 58. And then the next category.
Ron?
Yes.
Would you mind repeating the relationship between replacement value and price?
Yes, I say that much of what we're selling today is a completed home. I mean, if we're selling a home that's 30 years old, we're selling many of those properties for less than it would cost to take that lot, if that lot was vacant, and take that lot and build a brand new house. In other words, the cost of construction plus the increase in the value of land has driven the cost of a brand new home very high. And it's not going to be uncommon to see, well, I'll give you an exact example. In Pinecrest, the value of a single family lot from 3 years ago is up about $1 million. So, some of the last sales of a vacant lot, acre lot in Pinecrest is now at about $2.5 million. Kind of put that in perspective, we bought EWM in 1984. So it's easy for me to remember what we were selling things for in 84. So in 1984, we were selling an acre lot in Pinecrest for $125,000. So an acre lot, best areas of Pinecrest, $125,000 in 1984. So that was 38 years ago. And then when you fast forward from 84 to 2004, so that's a 20-year period, that $125,000 lot, we were then selling for $1.3 million. So it increased 10 times over that 20 years. And then we saw it continue to go on up in 04, 05, 06, and 07 until we hit the recession. The lot values got up to about $1.7 million. And then they just fell off a ledge, and we dropped to about 700,000 during the recession. And then we built back up to that, as you saw in those earlier graphs we talked about today. That land value grew back, to that $1.3 million, $4, $5, and it had just gotten back to that $1.7 million to even maybe $1.8 million or $9 right before the pandemic came. And then because of this surge of money coming in to buy in the high end, people wanted to build their own home. The last lots that have been selling in Pinecrest acre lots are $2.5 million. And, again, we talked about Key Biscayne earlier, same thing there, lots in Coral Gables, wherever you go. I mean, look at what we're looking at on Star Island, we talked about earlier. It's all relative to the neighborhood, but pretty much everybody has come to the party. Everybody's enjoying the party. I mean, if you own real estate, if you own land, it's gotten much more valuable. But when I made the statement that we're selling homes for less than the replacement value, obviously, if you have a brand new house, we all would expect that home to be more valuable than one that's been here for a while. But many of the houses that we have been seeing remodeled and brought back to their original grandeur, in some cases our historic homes, those have become very valuable, even more valuable because of all the new features that these owners have put into them. So, the good news too is that our buyers today want to see all these improvements made before they buy, and that's also helping to increase our values across the board because, with our Curbio program, for instance, we can remodel a kitchen and do a lot of things to give huge extra value. We had a Curbio sale recently where the value was about $650,000. They put $60,000 into it, so they had a $710,000 investment now that we ended up selling for over $900,000 because it just looked so good comparison to the before. So the before and after today, even when you go through the MLS with the limited inventory we have today, you don't find a lot of old kitchens in this inventory. And the ones that do have the old kitchens really pay the price for that because the sellers will never get back what they could have gotten had they made that improvement before we sold it. I would stretch out to say, pretty much guarantee that whatever it's costing you to put into improvements, you will get way more in an ultimate sale price, not only in price, but also in time to sell the property.
One other comment was about future projections based on what experts predict, like in the next 2 to 5 years as far as values. And if you wouldn't mind taking a moment, since you did touch on Curbio, if you might explain what that is, especially to our new agents who might not have been exposed to the Curbio program.
Sure. We have an alliance with a company called Curbio. They're based in Washington, D.C. They've worked with some of our sister companies in that market, and they've been in business now for, I've forgotten, 4 or 5 years, I guess. But their goal is to be in the business of refreshing homes. And the beauty of it is that they are well financed and capitalized. And so their program is, you tell us what you want to do. It can be something as small as just helping to stage the house for showing, bringing in furnishings for a few months and paying for that cost. Curbio will front all of those costs, and the seller does not pay for anything until the house closes. So for many of our sellers who just don't want to be bothered with having to find all the contractors and the decorators and all the people to help them with that, Curbio will do all of that. Obviously, our associates are involved in making that connection, and they can be as involved as they want to be going forward. But Curbio will come in, for instance, of kitchens, or kitchens and bathrooms are on everybody's list. They don't want old kitchens and bathrooms, and so Curbio will come in and say, okay, this is what it'll cost to change all these things, and we'll do all this. And by the way, we'll also help you re-landscape outside, and we'll paint the outside of your house, and we'll do all these things, and then you can put it on the market. and then we'll be paid when it closes. They add into that mix, their cost of money. So there's no interest payment, there's no architect fee, there's no contractor fee. There's just one fee, and they give you that. And then when it sells, we deduct that off the closing statement. The seller never has to front the money for that. The buyer doesn't have to do the work because it's already done. So that's a huge asset to be able to talk about. So we have materials for that. Patrick O'Connell, you've been so great to kind of keep all this going. So you're the one. You're the one to go to answer more questions than I've just talked about. But Sherry, hopefully that kind of answered some of what you were thinking.
Yes.
Okay. I'll just kind of, let's see, what time is it here? It's almost 11 o'clock. So we're going to kind of wrap up here in a few minutes. This is the $2 million price, 2 million to 3 million condominiums. As you see, 211%, 188%, 972% increase in condos between 2 and 3 million. The $2 and $3 million condo has become kind of a sweet spot for condos. I mean, I know that sounds like, wow, that's a lot of money. A lot of people still cannot afford $2 to $3 million, but this is what a lot of people are looking for today. Our luxury markets are no longer $1 million. I mean, they're really starting at 2 million, and in places like Palm Beach, they're, even starting probably higher than that. So when you look at the $3 million to $5 million market, again, Dade County up 164% for single family. Then when you go to condos, Dade County up 240%, then Broward 106%, Palm Beach 91%. I kind of give Palm Beach a little bit of a footnote here because they were seeing these high prices before, and so they appreciate a lot of those sales in 2020 before we got into 21. So, but Dade County was still kind of smarting from the fact that our condos were closed down in a great portion of 20. We couldn't even get into a condo to show it because of COVID. And now that those have opened back up, the beautiful amenity packages that, condos, when you start getting into this 3 million plus range, a lot of people want this. So then 5 million to 10 million, again, healthy increases in single family sales. And then look at this, $5 to $10 million, Dade County condos up 358%. Now, we're not talking about a ton of units, but we've gone from 47, so we have 234 on the market. Last year, we sold, 2 years ago, we sold 47, and then this past year, we sold 213. So if you ever needed proof that, that the wealthy are coming here, I mean, these graphs certainly show it, 358% to, 720%. The condos in Palm Beach at that level, they obviously lean more toward the really high-end single-family houses. There are only 23 condos like that on the market in Palm Beach County. Last year, there were only 5 sold. I need to kind of look into the MLS a little deeper to that to see, why there were 34 the year before and then only 5 this year. But, when you get into these small sub-markets, you do have to kind of take these graphs and find out the rest of the story behind these numbers. Now, in the over $10 million in condos, again, in Dade County, there are 149 sales last year of condos over $10 million. And that's, a dozen a month. And Broward County was selling 27. I did sell 27 last year. So that's a little over 2 a month. And then in Palm Beach County, over $10 million. This is why their 5 to 10 million was lower, because everybody moved up to the $10 million range. They were selling a dozen, also about the same as Dade County, over $10 million. So, that market is certainly here to stay. And I think that was our last slide. So we can talk now about whatever anybody wants to talk about. I want to, before we do that, though, let me just have a couple of comments on rentals, just so we can kind of get our hands around that. Rentals, again, it's not good news for people on a tight budget. A single family rental a year ago was $2,800 a month. So the median price, half of the tenants were paying more, half were paying less, was $2,800 a month. This year, it's this past year, it was $3,500 a month. So this is for the last quarter, October, November, December. So October, November, December of 20, the median price for a rental of a single family house in Dade County was $2,800 a month. This year it's $3,500 a month. It's a 26% increase. Condos last year, it was $2,000 a month. And this past year, it was $2,750 a month, a 37% increase. So I know that all of you know how tough it's been to find rentals. You know, our rentals are, 1.5 to 2 months of supply. It's been like that for a few years now. So that has not been easy. Not talking specifically about rentals, but talking about condos. If you look at the Brickell market under $500,000, we had a lot of condos at one point in Brickell in the 350 range. And now under $500,000, we've had an 80% drop in the number of units available for sale. So you had a year ago, 1,136 units on Brickell priced under $500,000. Today we have 227, a reduction of 80% of the inventory, while the sales have increased in the under $500,000 price range by 40%. So I guess if we're looking for predictions today, I would say the under $500,000 Brickell market is going to continue to stay pretty strong because the inventory is shrinking away. And many of these charts that we're looking at, even like the one that's still up here, we have to kind of go back and see that the bottom end of some of these charts is just the chart below moving into the chart above. So as we're seeing these prices increase, it's showing, maybe lower sales than we would expect to see in the lower price range, but that's because many of those homes have now moved into the higher price range. So when you look at, speaking of Brickell again, that was the under $500,000 market. But when you look at the $1 million plus market, where, it had been pretty soft in Brickell for a few years, but not anymore. Sales in the over $1 million condo market in Brickell are up 295%. A year ago, October, November, December, just in those 3 months, there were 21 units sold in 2020. October, November, December of 21, there were 83 units sold on Brickell. Buildings like the Four Seasons, which is one of the best buildings built there. I mean, there are a lot of beautiful buildings built there, but I mean, well positioned, and Santa Maria, so many of those high-end buildings had been very quiet over the last 10 years. And now you're seeing people buying, 2 units and adding them together because they want larger homes in the sky. So I think that we will continue to see that in areas like Brickell, especially the downtown area. I am signing broker registrations every day now. I mean, yesterday, I think I signed 5 broker registrations for new construction. A lot of those are buildings, the Aston Martin in downtown Miami, and the new Waldorf Astoria, and just, Mr. C's and the Grove. I mean, a lot of these properties in Dade County, and we don't have as much of the new construction happening in Broward and Palm Beach, but we know that developers are working on that. We're talking to some of these developers about representing them for some of those projects. So I think that we will continue to see a lot of new construction as well. So it's an exciting time, but I know that everyone says, well, how long can this last? Well, I think as long as the people keep coming is what will determine that. And I think that we will continue to see many people coming from the Northeast, not just in search of lower taxes, which is still a main draw, but in search of just what we have to offer. And people ask me all the time, what is it that makes Miami or South Florida so special? Well, I tell everybody, as trite as it sounds, the weather will always be something that people have high on their list. But in addition to that, I think that the ease in getting here, you can travel into any of our airports, Miami, Palm Beach, Dade, Broward, or Fort Lauderdale. It's so easy to get here from anywhere in the world. But the last, asset I think that we have used to be one of our biggest challenges, and that's our diversity. If you flash back, 40 years, it was like, oh, wow, this place is changing. I don't like it. Versus today, everybody wants to experience the diversity that, this rich diversity that we have. And, I know, each one of our families, I mean, we just all have friends now all over the world. And that doesn't happen in very many places, especially as seamlessly as it's happening here. You know, we have a state now that's recognized globally as a state that has been dealing with, you know, the problems of the pandemic well. You know, these Wall Street Journal articles, you know, I showed you their headline there a minute ago, you know, not very complimentary of the way some states have locked down their states until their economy is just suffering so badly. Whereas it was risky, and we still are not out of the woods yet with COVID, but you know, the leadership that we've had, forgetting about what side of the aisle we're all on. But I think that, you know, we still need probably a more middle ground, you know, leadership, you know, philosophy. But I do think that Florida is being seen now as a very positive, open for business kind of a state. And that's been a real draw to some of these companies coming here. So I'm just kind of rambling here at the end, but Sherry, what else
I
you
was
got?
going to say, Ron, I think some of what you've been commenting on answers a few folks who've asked about your projections, you know, or experts' projections for the next 2 to 5 years. And adding to that is maybe some of the opportunities and risk that we think we're going to see here in South Florida.
Well, I go back to these months of supply again. You know, here we are looking at the $10 million and higher. Look at the supply, 5 months of supply in Dade County. You know, Broward is showing 20 months of supply, but you know, with such a few number of sales, you kind of have to look again at these supply numbers too. But in Palm Beach County, 6 months of supply. So when you get down to those levels of supply at these very highest prices, you know that we are attractive to people. I think maybe I've told y'all this story. This was a couple of months ago. One of our newest affiliate members through the Berkshire Hathaway Home Services Network is in New Delhi, India. So this is a real estate brokerage firm in New Delhi that has now aligned themselves with Berkshire Hathaway. They carry our same looking business card, our logo, our name, everything about it, but they're in India and we're in South Florida. And so they invited me to be a part of their kind of grand event that they had announcing their new affiliation a couple of months ago. And so I'm on a screen just like I am today, but I could see the people I was talking to, and they had a room full of people in an auditorium, and I was probably on a 30-foot screen, and I was just talking about all the things that South Florida has to offer and how we would welcome them to come here. We have a lot of people, a lot of Indian folks in our community already. And so after I finished, though, I realized that I was the only presenter of all of our companies from the US. We had someone from London, someone from Greece, and other places. So I called back our Berkshire affiliate, the contact that I had talked to ask me to do this. And I said, oh, I enjoyed it, but how did I get invited? I was the only person from the US. And they said, oh, no, they asked for you. And so I said, well, I don't know anybody there. How did they ask for me? And they said, oh, no, they wanted somebody from South Florida because that's what they're interested most in. So, boy, does that speak well to how well we have sold our community to the rest of the world. You know, and this is just such a joint effort with so many people. I mean, you look at our convention and visitors bureaus, you know, for all 3 counties, and you look at our economic development agencies for all 3 counties, and you look at how we have, as individual companies, promoted our communities. You know, all of this collective marketing has paid off in a big, big way, long before COVID ever came, long before tax decreases came. You know, we were prepared for all of this when this happened. And, you know, I look at, you know, I know most of you know George Perez, who has built in all 3 of our counties, and, you know, the related group. And, you know, George is an icon in my mind. It's what he's done to transform these communities and take huge risks. And of course, you know, George is a billionaire himself now, but he has earned it. I mean, he worked very hard to produce something for all the rest of us to sell. And of course, the real byproduct of everything that we've been able to do as a development community is to build this brand that everybody now recognizes as a top brand in the world. And, you know, Bill Talbert was the head of our Convention Visitors Bureau in Miami. And, you know, what a sales guy and just what a brand guy. And he just retired a couple of months ago. And when our last magazine came out, you know, our Lifestyles of South Florida magazine came out, on a Sunday morning, he sent me just a little text, and he had a picture of his wife just at their breakfast table with the magazine that they received at their home and reading it. And so all of these little pieces just tie together. And, we haven't talked much together about our magazine, but our magazine is getting world acclaim now from people. I mean, we're now talking with some of our sister companies in the Berkshire Hathaway network that want that magazine in their market, whether it's the West Coast, East Coast, but we have something that's very, very special here, and the whole world now knows about it, not just because we've been telling them about it, but because collectively our community's been telling them about it. And you go back to the Alice Robertson and what she did, the part she played as a government employee to have a major impact on our values in the downtown market. We have so many people doing that. Francis, our mayor, right now of Miami. I mean, he's doing he's kind of a cool hip mayor now that everybody wants to listen to. And of course, all those pieces help. And the same thing in Palm Beach and what they've done, with their community for years, the arts. And I would say that Miami was probably the last community to really develop a full arts program. But now our performing arts and our visual arts and the museums and all that we have, I never really appreciated what value that was going to bring to us until we saw Art Miami and Art Basel and all these 15, 17 years now that we've had that coming to our community. And so all those pieces together have given us value and given us demand. Now, that is very, very positive for us and our industry. I mean, I was talking about Pinecrest a minute ago. I noticed that, it was a house in Pinecrest that just sold for $9 million. Well, I never dreamed that we would be seeing those kind of prices down there at this point in time, but we are. But I think that we will continue to see, our values getting very strong, which is obviously very good for our industry, for our rank and file employees in the community. We're going to have to do more to make things more available to them. And it's not easy. Many communities across the country, struggle with this because their communities get very valuable. And of course, we don't have anywhere left to grow. I mean, from the beach to the Everglades is about 18 or 20 miles across most of our three counties. And so, we're just going to continue to go vertical. And I think that probably will be the answer, for a lot of our lower income folks, because we're going to have those opportunities, made available through government type programs or however we do it. But we are certainly are sensitive to that. But I don't have an answer that somebody was looking for early in this call today. So.
Well, we do, kind of switching gears a little bit. A question came in about the new Fannie Mae rules on condos and the amount down and restrictions about the up-to-date improvements and their 40-year reviews, and just wondering if that's going to hurt those condo markets.
Well, certainly those condos that have not been taken care of themselves are going to be hurt. Condo fees probably generally are going to be higher. Going to have a higher increase this next couple of years than we've historically seen, because now we see the pain and the heartache of not taking care of a building. And I think that many of these buildings have just continued to delay repairs that are needed. I mean, condo buildings are just like our homes. I mean, if your roof is starting to leak, you don't just put a bucket under it, you do something about it to fix it. And of course, a lot of these condos, in fear of raising fees for their friends and neighbors, the boards have taken an easy way out and not done that. So I think that we definitely are going to see higher. But for the buildings that are well maintained, I mean, the condominium lifestyle is a wonderful lifestyle. I mean, most of these new buildings we're building are like mini country clubs now. And so people love the amenity packages and they love the community that's in those buildings. And I think that will continue to be strong. So I think that, what was certainly a huge tragedy for the families that have been affected by Surfside, we'll see that we'll see the positive impact of that is that the rest of our buildings are going to be maintained better, going to be scrutinized more. And but Miami, South Florida, and at large has been a condo community now for a decade. We're selling more condos than single family homes. And I think that's just going to increase as more people want to come here. We're going to have taller buildings and more of them. It means that single family homes are already collector's items, because we're not going to be able to build any more of them because there's just no more land left to do that. So.
Okay. Well, on another condo comment, somebody else was asking about the latest related projects in Brickell, like St. Regis and Baccarat and some of those.
Yep. Mhm. Well, we're seeing the same kind of excitement about those buildings as we've seen about the other ones that I mentioned. We have actually signed some contracts in those, maybe not as many as we did the others I mentioned, but I think a lot of that is just the timing of when people see that they're going to be completed. So when a building is already under construction, that really motivates buyers, as we all know, because they know they're going to miss out if they don't do something quickly. But I think new construction is just a part of Florida's life, because as we continue to grow, we're going to need more housing. When you're growing at the rate we're growing at almost 600 people a day, all those people can't afford, a $2 million condo, but many of them, a growing number of them can. And I think that that's just going to give opportunities for developers and our communities at large, to increase our tax bases. It's when you come to South Florida, in comparison with any other major metropolitan areas you go to, we are just different. I mean, we're cool, we're clean, we're friendly. It's just the diversity I mentioned that earlier is such a valuable asset to us now, where people want to experience the diversity. I love the stat of our school systems here in South Florida. Miami is the fourth largest school system in the nation, public school system. Broward is the fifth largest public school system in the nation. And if you look at the stats for the Miami-Dade School Board, or schools at large, there are 345,000 students in our Miami-Dade County schools. Those 345,000 kids were born in 117 different countries. And when they go home in the afternoon, they speak one of 106 other languages or dialects. I mean, just find one more place that is as diverse as we are. Again, I'm a kid who grew up in Tennessee. I didn't know anything about 171 countries or 100 languages when I was growing up. But boy, have I enjoyed it in the years I've been here. And of course, our kids have certainly benefited greatly from growing up here as well. So I think that we have just kind of touched the surface of what we're going to see coming in the way of affluency. We're certainly going to start rivaling some of the most expensive sales in the country. Southern California still has that distinction, but our company, our Berkshire Hathaway company in California, sold the Beverly Hillbillies mansion. That was the old TV program. They sold that last year for $150 million in, I forgot if that's in Bel Air or Beverly Hills there, but it's right there in the midst of all the expensive homes there. So, we're fortunate to be a part of a community of companies now that touches luxury no matter where you are, and from the Northeast to Southern California to South Florida. So we have a lot yet to look forward to in that regard as well.
And really, I seem to only have maybe one other comment or question about interest rates. I know in the early 80s, we had some of the highest rates that our country ever saw, between 10 and like 16%. So with the idea that these rates are going to go back up some, what do you see kind of happening as far as the market is concerned?
Well, I think I was going to get over here and find that rate, but now I guess, well, you can see that now. That's all right to leave that screen on there, I guess. I think interest rates are going to go up. That's what I was looking for, is that next slide that shows that. I think that this graph, well, that graph there talking about inflation, that's something that, others are going to have to figure out. We're not going to be able to figure that out, but we can certainly help people with this graph. Let's see, I'm trying to move this over here. That's not moving.
Actually, we're viewing what you have on your side screen. So,
yeah. Oh,
but I see what you're trying to do with the interest rate on buying power.
Yeah.
Okay.
Okay. Yeah. See, we're going to swap. There we go. All right. This card right here, I mean, we have this printed on the card, and we'll send this out to everybody when we hang up here. This is something that, we've talked about this for years, but it's happening now. I mean, we're no longer at 3%. So I'm not going to change the graph because I don't want to spook people and put a 5% on this graph. But I think 3 to 4%, we're certainly going to be in that range and growing higher this year. And again, I'm just basically telling you what I'm getting from our folks at Prosperity, what I'm getting from, just looking at the national news on this. We need to control inflation. And in order to control inflation, one of those is going to be, controlling interest rates or dealing with interest rates. So this chart right here, or this little graph here, shows you, what's happened just in the last year. So we definitely are seeing an increase in rates. And I think that later this year, even, later, this first half of the year, we're going to see this continue to increase.
Well, and Irene Fernandez has a great, probably ending question comment from you on how to better serve buyers. It's getting increasingly more difficult to find things in buyers' budgets. A lot of times there's not even anything available. So if you have any suggestions, strategies, or tips, of course, as we know too, a lot of sellers aren't wanting to sell because they have nowhere to go. So maybe any thoughts too on new construction for single family homes or building relationships with developer and new specs homes. And I guess with that, any segments of the market that still represent some good opportunities.
Well, thank you, Irene. Thank you, Sherry. I tell everybody, if you're not in the game, you need to just get in the game. I mean, if you have never bought anything, I mean, this is what we would say to our buyers. If you have not bought a home, if you're in between owning a home, you need to get in the game. I haven't looked today to see what the stock market's doing, but there aren't a lot of places for people to invest their money today. And so they're looking at stocks, they're looking at real estate. The market's down a little bit more today, which yesterday was not a pretty day. But I think that a lot of people are now looking at real estate as their hedge against, what could happen with inflation, what could happen with interest rates. So, now's the time to buy something. Now, as Irene said, what people come to us with and their expectation may not be in their budget. And it's hard for us to have that discussion with them. But I love being able to say, look, here's a great value in a condo. Condos are going up in value. Here's one that, for whatever reason, the owner just wants out, and, here's a chance to buy something. So they may have to buy something that they didn't first think that they would own, but then that's where they would end up. But once they're there, and they're there 2 or 3 years through an inflationary period, it's going to be worth more money. I mean, I can't guarantee that. A lot of things can happen tomorrow in the world with hurricanes and wars and who knows what. But I think that not having some real estate ownership is not going to be, well, I guess I can make it in a positive statement. Having real estate ownership is going to be a positive long term. When I look at those prices today from where we were, even 2 years ago, certainly from where we were 40 years ago. Again, I moved to Miami in 1975. I could have bought any small lot house in Coral Gables for $65,000 to $75,000. You look at a 5,000 square foot lot on a 1,500 square foot house on a 5,000 square foot lot. They were $65,000 to $75,000. Today, those very same homes, maintained and updated, are $1 million. Certainly, in the 800,000 to $1 million easily. So again, that's a long stretch of time, but even in shorter periods, I mean, one of the gratifying things about our business is, working with young families that, buy their first house and they scrape and they to get into it. And then, it's a townhome, and now they have 2 or 3 kids, and they've lived in the townhome for, 8 or 9 years. And then they wake up one morning and go, oh my gosh, we have $250,000 of equity that we would have never had we not bought this townhome. And, yes, they were squeezed into a townhome for a number of years, but then when they can go out and buy a house, it's, on a half acre of land with a pool. I mean, and I'm telling you that because I'm thinking of a particular family that did that. And of course, just what it means to those people to be able to do that. And we get to help them do that. And so, Irene, I know it's not easy, but, that's the conversation that, I like to have with people that just got to get in the game. And for us, it's the same thing too. I mean, you look around the people who are successful in our business, they're the people who just keep going. I mean, showing up is half the battle. And, we have a lot of agents in this industry that never do anything. I love the little joke about when you get caught for speeding on the Florida Turnpike, they ask for your real estate license first because more people have those. And but I think that the people who are really working, as we all know, it's 20% of the people are doing all the work. But there's no reason that everybody can't participate in that. So I know it's the beginning of a new year and everybody's looking for, well, how can I get into this more? Well, so much of it is just showing up and having the knowledge, and just like we're doing here today. We have wonderful training, with Brian and with Karen Ross and Brian Williams and Karen Ross. And I think that we're more of you are taking advantage of that, but we offer those every week and they're online. You can even do things by yourself online. So I think that just again showing up, following what we're all talking about. I mean, one of the real values to being a part of a company like ours is that you just have help all around you. There's so many mentors within our company for people who are brand new, and just people, EWM associates are just nice people. I mean, I often say that our number one asset is just the fact that we're just nice, and people, they want that. Those are the people they want to work with. And yeah, we still have a lot of competition. We will always have a lot of competition. But at the end of the day, we don't become number one in these markets by, going home at 3 o'clock every afternoon. So anyway, I thank all of you for what you've been doing this past year, what you're doing this week, what you're doing today. Thank you for taking the time here today. I know, I can talk a lot, and we've spent a good hour and a half together again here, which I didn't mean it to be an hour and a half, but
well, Ron, I think that's a perfect note to end on. Just get in the game. So I appreciate all those who stayed with us. Most of the people did, and there was a lot of great information, which we're going to be sending back out to everyone. I know there was one comment if we had rental graphs, which I appreciate. These are geared towards more the single family condo for sale. But what we have, we'll be happy to push back out to everybody. So thank you again for attending.
Yeah. Just watching probably take about 10 days to get our full report out. I mean, that's the exhaustive report with a lot of individual city information, and rentals will be in that report as well.
Awesome. Well, thanks again. And we'll get this back out as soon as it's ready.
Okay.
Have a great day.
Thank you, Sherry. See ya.
All right. Bye.
Bye-bye.